Welcome to qiphyedu. Today we'll be looking at Economics A2 level, paper 31, May, June 2021. Alright, let's start. Okay, so for the first question it says, what is a negative consumption externality associated with chewing gum? So the main point here is negative consumption externality and chewing gum. So negative consumption externality basically means that you are over consuming an item that is actually not good for your health or not good for your person for you basically. So let's look at the four options here, seeing which one is negative consumption externality. Okay, A, it says better dental hygiene from chewing gum. If that is the case, that means it's positive consumption externality, because if it's negative consumption externality, that means that you're over consuming the good. Now you need to under consume because it brings harm. Dental hygiene basically means that you need to consume more because there is under consumption. So basically, like, it's a very good and you need to increase consumption. So A is incorrect because of that. B, it says cost of the ingredients in chewing gum. The cost here is actually associated with your supply. The producers have to think of the cost of that particular, to produce that particular good. So that's why it's not part of consumption externality. So we can just rule that out. And then C, it says discarded chewing gum on pavements. Now this one is, as you can see here, if you were to take chewing gum and then you don't throw it into the bin and then you throw it on the road, of course it will cause issues to other people because their shoes will then be stuck with chewing gum. Probably also lead to probably some malfunctioning of some particular equipment. So yes, that is negative consumption externality. Now let's look at D. D, it says smells from chewing gum factories. So you need to look here, the main point is factories. That means that you're producing the chewing gum. When you're producing a chewing gum, it results in bad smell from the factories. This is negative production externality. Therefore, D is incorrect because that's the answer here is C. Question 2. A firm produces its goods at an average cost of $14. It then produces the same output at a lower average cost by different methods of production. The price remains above the marginal cost. Okay, so average cost of $14 produces the same output at a lower average cost by different methods of production, price remains above marginal cost. That tells you that there is definitely no allocated efficiency, because allocated efficiency is when P equals to MC. But here it already tells you clearly that the price is above the marginal cost, so it is more than P is more than MC. So we can directly rule out allocated efficiency, so C and D is wrong. But it did mention that there is a lower average cost at the same output by different methods of production. This one, that means that there is dynamic efficiency. So that means there's no allocated efficiency and there is dynamic efficiency. Therefore, answer is B. Question 3. In 2008, Beijing held the Olympic Games and built a new stadium and infrastructure. 1.5 million people lost their homes and were relocated far away from their communities. Factories were closed during the games to reduce air pollution. Today, the stadium is a major tourist attraction and the athletes' accommodation is used as apartments. For which group is the likely excess of marginal social benefit over marginal social cost the greatest? MSB more than MSC. Okay, so let's look at the four options. A, it says construction workers who built the site. Now you need to remember that marginal social benefit is basically a combination of marginal external benefit and marginal private benefit. The construction workers are directly involved in building the stadium and the infrastructure, and also the athletes' accommodation. So for them that will be marginal private benefit instead of marginal social benefit. Production. So marginal private. They will be the one incurring the cost. So A is not the answer because it's not direct, because they are not externally involved. B, factory workers return to their job after the games. This is not. Basically, they are already at a loss because now factories were closed during the games to reduce air pollution. They are already at a loss. So now you really see that it says marginal social benefit over marginal social cost. Alright, so when it comes to this particular condition where the factory workers return to their job after the games, of course their marginal social benefit will not be over marginal social cost because they are already affected during the games. And so for them, they are already affected, so there's no way the marginal social benefit is over marginal social cost, so B is incorrect. Then for C, residents who were rehoused far away from Beijing. So of course in this case their marginal social benefit will be lower. because they originally live in Beijing. Now they are forced to move out of Beijing. So when they are forced to move out of Beijing, this means that they are unable to stay in their original homes. So to them, right, there will be less marginal social benefit. If there will be lesser marginal social benefit. So C is incorrect. But then those who live in the former athlete accommodation, they will have marginal social benefit because they are able to consume the good after the Olympic Games. They will be able to live in that particular area. So there are more accommodation for them. So yes, for this one, people who are externally not involved in the Olympic Games, but then later on able to live in the accommodation, they are the ones who will be getting marginal social benefit higher than their marginal social cost. Therefore, answer is D. Question 4, the graph shows the budget line for a household as used in indifference curve analysis, and what can be concluded about the amount of income that can be spent by the household. So the budget line is basically the maximum combination of two goods that can be purchased by the consumer based on his or her given income and also the price of the two goods. Now you see here, because all these points are on the budget line, this means that it's already the maximum combination that the consumer can buy. Now, of course, we are not sure about the indifference curve because the indifference curve could look like this, it could look like this, it could even look like that. So it depends on the indifference curve itself, whether or not it will give equi-marginal utility. So in this case, right, we can conclude that for all of the 3 points on that budget line, it's already the maximum combination. So the total income is basically already maximum that can be spent by the household if it's on R and S and T. So let's look at the 4 options here. A, it says it is greater at point R and the point S. This one is wrong. Actually, for B and C is also wrong because anything that says greater will be wrong because everything is on the same curve. So D, it says it's the same at points R, T, S and T. So that's correct because they are on the same points and that's the maximum amount of income that they can spend. Question 5, which act of purchase or consumption is most likely to illustrate the law of diminishing marginal utility? Law of diminishing marginal utility, basically when you consume one more good, the marginal utility you get will be lower than the previous unit. So let's look at the 4 options here. A, it says the final cost of an eat all you can banquet to end an evening out. This is correct because you have too many meals in an eat all you can banquet, like a buffet, for example. You eat too many things and then at the end there's a final cost. Probably people would choose not to eat that, maybe it's a dessert, but then people would normally choose not to eat a lot of that because they are already full, their stomachs are already full. So this is an example of an example of how the law of diminishing marginal utility will come into play. Then B, it says the last coin to complete an enthusiast coin collection. This one cannot be ruled as an example to illustrate the law of diminishing marginal utility because you consume that good, but then for coins, right, you don't exactly eat coins, you collect them. So when you have a last coin to complete an enthusiast coin collection, you feel like you have already completed a target that you want to achieve. And then your satisfaction will increase because you have already completed the last piece of the puzzle. So that's why there's no diminishing marginal utility here. Then C, the second of the 2 rolls of wallpaper needed to decorate a room. This is not going to be an example of law of diminishing marginal utility because there are 2 rows and then you need the extra row, the second row, in order to complete the room. So once you're done with that, of course your room will look complete and then your marginal utility will increase. So this is not an example. D, it says a 10 driving lesson needed to enable a learner to pass the driving test. The marginal utility here would be when you, like what I mentioned just now, when you consume an item. Now this is the lesson needed to enable the learner to pass the test. So once he or she has completed the lesson, then he or she will be able to pass the driving test. Your marginal utility would increase because you will then be able to end the course. But it can also be let's say if you were to engage in too many lessons, yes, it will also result in a decrease in marginal utility. People may not be happy with that. From a human's perspective, of course you will want to end a driving test quickly, but then if you are able to pass the driving test, then you'll feel happy, then you would be able to complete the course with a satisfied mind. So it's not exactly very, if you were to compare with answer A would be better because you are eating the item, then you feel like you're already full and then you don't want to consume it any further. But it depends for driving lessons. So answer here is A. Question 6, the King demand curve is often used when economists attempt to analyze the way in which oligopolies operate. And what does the King demand curve indicate? Okay, so let's look at the 4 options. Oligopolies are unable to achieve profit maximization. This is incorrect. Oligopolies are able to achieve profit maximization, just that they choose not to because they want to sell at a higher price and lower quantity. So it's incorrect to say that they are unable to achieve profit maximization. B says satisficing is the best objective for firms that operate under conditions of oligopoly. Not correct. Because the King demand curve, if you were to go with price satisficing, it's basically when you are when you are actually setting a minimum acceptable level of achievement in terms of profit. So they are trying to, they are not trying to actually get they are not trying to actually earn a lot of profit out of the items. So when you look at King demand curve, if you were to set an item that of a price that is too low, if you remember in the King demand curve, if you set it too low, the demand will also be elastic. If you set it too high, it's also elastic. But if you set it at a center amount, it will be inelastic. So to say that satisficing is the best objective for firms under conditions of oligopoly, incorrect. Then C, there are always benefits available for oligopolies if they reduce price but not if they increase it. Incorrect. If you look at the King demand curve, it looks like this. So let's say if you reduce price, yes, you will be able to enter a stage where your PED would be inelastic. If you increase it, there's also a chance that you'll still remain in the inelastic portion instead of the elastic portion. To say that it will not, if you increase it, there will be no benefits available, that's also incorrect. And D says there is a tendency towards price stability when firms operate under conditions of oligopoly. And that's exactly why people would prefer to just sell it at one price. And if you were to continue on decreasing prices, then people will lean over to items that would have a lower price. And this will end up having other firms reducing a price, resulting in all of them maybe incurring only normal profits. So under this condition, people normally who engage in cartels, they actually wanted to earn a profit, a decent amount of profit, and so in order to do so, they would then collude and then sell at a lower quantity at a higher price. So for this one, the answer is D. Question 7, why might a firm adopt a policy of diversification? Okay, so just to diversify the products. So A, it says to achieve cost economies of scale, which is incorrect. If you want to achieve economies of scale, you need to have more machines producing the same item. Here is diversification, so A is out of the question. B, to agree common prices with rivals. This one is incorrect. Diversification is basically when you produce a bunch of products like what I mentioned just now. So to earn a profit from different items, not to agree with the common prices with rivals. And C, to ensure greater ability to spread investment risk. This one is correct. So investment risk in different types of products, so that maybe this product may be successful, the other product may not be, maybe some other would be. So yeah. And D, to increase productivity of labor, then you need to have only one product. So answer here is C. And also, if you want to increase productivity of labor, you need to have them in different stages of production process, but then only being able to do that thing over and over again. Question 8. What would be likely to help a small firm to survive and what might be a threat to its survival? Okay, so helping the small firm to survive, it says contestability of market. This one can just immediately rule out, because for contestability of market, small firms would mostly always lose because larger firms will always win out because they have lower economies of scale. B, it says customers valuing personal service. Yes, people would prefer customized items, they would go with small firms. And then the threat here, it says new government regulation on its businesses. Yes, this is possible. And then let's look at C and D. C says low barriers to entry in its industry. Okay, that could be one. But right here it says managerial this economies of scale not possible in a small firm, because small firms, they're easy to manage the entire management. And D, it says selling a homogeneous product. This is not of help. They need to sell differentiated products. So D is wrong because of that. So answer here is B. Question 9, the diagram shows the cost and revenue curves of a profit-maximizing monopolist and what measures the total monopoly profit made by the firm. So we need to look at the point where MC equals to MR. The point where MC equals to MR is actually, okay, profit-maximizing monopolist, so MC equals to MR is here. So the total monopoly profit would have to be the entire area where you can see the revenue above the ATC. So that will be here, and here, and here, and here. So the answer here would have to be the entire area of this. You need to remember, you need to multiply the area. So JM is the difference between the price that you sell and also the point where your MC equals to MR. So not this one. JK is just the price of the price that you sell and also the cost. But then it's not the entire quantity, so this is not the answer. Same goes for C because it already mentioned JM. So answer here is D, which is JK times OQ, the entire area. Alright. Question 10, the diagram shows a firm's short-run total cost curve and which statement is correct. Okay, so the total fixed cost is here, and then the total variable cost will be from here to here. Same goes for this and same goes for this. Alright, so A, it says average total cost is minimized at output OQ2, incorrect. Because you need to see here the total cost. It will always be the higher quantity here. Looking at the, okay, not to say it's always the highest quantity, but because the curve itself, if you look at the curve, this one is, it increases at a decreasing rate, then it becomes stagnant, then slightly increases at an increasing rate again, but it hasn't increased to a point where it's completely straight. So you take the total cost and you divide by quantity, you get the lowest average total cost at OQ3. Okay, then for B, it says average variable cost is minimized at output OQ1. This is incorrect because, as you can see here, the entire thing here is a considerably large area, and then for OQ3 you can see that it is slightly larger as well, so OQ3 will not be the answer. In this case, it will have to be if you want the average variable cost to be minimized, that will be at OQ2. And then for D, it says marginal cost is minimized at output OQ1. That's correct because you can see the slope is actually flatter than the others. This one is already at a steeper gradient. The one that's much flatter will be here, so the marginal cost here will be the lowest. So the answer is correct for D. The answer that's correct is D. Alright. Then for question 11, the diagram shows the demand curve for firm's product, and which diagram shows the shape of the firm's total revenue curve. Demand curve is elastic, completely elastic. So you can see even if you increase output, the price will be the same. Your revenue would increase at a constant rate. So A is incorrect because it says revenue is stagnant. If you buy more, then it will add up to the revenue itself. So there's no increasing and decreasing. B is also wrong. D is not correct because it increases at a decreasing rate, then it increases at an increasing rate. So the answer here will have to be C. Okay, question 12. What identifies the output level required to meet the stated aim of a monopoly firm? Okay, monopoly firms, they would prefer to... There are some aims of a monopoly firm. Monopoly firm, they could be a natural monopoly, they could be a profit maximizing monopoly, or they could be a revenue maximizing monopoly. So if you look at A, it says maximum efficiency, marginal cost is at the minimum. This one is incorrect because maximum efficiency basically talking about allocated efficiency. So monopolies, they do not want that. And B, it says profit maximizing, marginal cost is equal to average revenue. Incorrect. If you want profit maxing, it has to be MC equals to MR, not MC equals to AR. And then C, it says quantity of sales maximizing, marginal revenue is equal to average cost. Quantity of sales maximizing would have to be when your AC equals to your AR. So it's incorrect because of that. Because quantity of sales maximizing is basically when your average cost equals to average revenue, you earn a normal profit. So C is incorrect because of that. And D says revenue maximizing when marginal revenue is 0. That is correct. Because if you try to increase anything beyond MR equals to 0, then your marginal revenue is negative. Your marginal revenue is negative, meaning that you are getting a decrease in your revenue. So answer is D. Question 13, the government implements 3 economic policies. 1, it says lower income tax. 2, it says higher indirect taxation on alcohol to reduce consumption. And 3, higher spending on infrastructure. Which policies represent forms of government macroeconomic policy? Lower income tax is part of it, but indirect taxation is not. And then spending on infrastructure, part of supply side policy, so yes. So the answer here would have to be 1 and 3. Okay, if you need to remember this. Lower income tax is part of fiscal policy. Higher spending on infrastructure is both government expenditure, which is part of fiscal policy, and also on supply side policy. But higher indirect taxation on alcohol to reduce consumption, this is part of government intervention in the microeconomic policy, which is part of subsidy and taxes. This one is indirect taxation on a specific product. Whereas for income tax and all those, that is part of direct taxes, right? So that will be 1 and 3. Then question 14, when there are positive externalities in consumption, what can be concluded about the output of the market? If there are positive externalities in consumption, there is under-consumption. So A says output must be above the allocative efficient level. This is incorrect. B says output must be at the allocative efficiency level. Incorrect. Price must be equal to marginal cost. In this case, you can see there are still positive externalities, so it's not at social optimal level. And C says output must be below the allocative efficient level. That is correct. D says output can be above or below the allocative efficient level. Incorrect. If it's above the allocative efficient level, there will be negative externalities. If it's below the allocative efficient level, only then there's positive externality. So D is half correct and half wrong. So the answer that is most correct would be C, below the allocative efficient level. Question 15, the Gini coefficient of a country is 0.4. The poorest income earners in this country pay no income tax. The government increases the tax rate on the highest income earners, which result in more even distribution of income. And what can be concluded from this? So in this case, right, because if you increase the tax rate on the highest income earners, of course, this means that there will be more income equality because the income is progressive. So the Gini coefficient will fall. So C and D is out of the question. And then the income tax system will become more progressive. So the answer is A. Question 16, what is meant by economic rent? Okay, so economic rent is basically the amount above the minimum required to keep the person in the job. Basically, if your supply is elastic, you'd be paying transfer payments instead of economic rent. If the supply is inelastic, you'll pay the entirety in economic rent, because you need to have a lot of money to keep. You need to have this specific amount of money to keep that particular cost factor of production in business. So A, it says any amount above the minimum earnings required to keep labor in its current job. Correct. Let's look at the other 3 options. B, it says the marginal physical product labor multiplied by marginal revenue. Incorrect. That is okay, that is part of your labor market intervention. So that is, if you were to multiply your MPP and MR, you'll get MRP. So this is incorrect. And then the minimum amount required to keep labor in its current job. So also not part of economic rent, like what I mentioned just now. Economic rent is above what you need to keep that factor of production in place. And D says the regular payment to a property owner in exchange for the use of building. That is not, that's just rent but not economic rent. So answer is A. Okay, for question 17, the firm operates under perfect combination in both product and factor markets with labor as the only variable factor input. In the diagram, the line JK shows the relationship between the marginal physical product of labor and the hours worked. When the marginal revenue of the product is 1.6, the firm uses 3,000 hours of labor. So what is the hourly wage? So here you can see if the firm uses 3,000 hours of labor, the marginal physical product would be 4 units. Okay. So because it's 4 units, so you just have to take 1.6 and you multiply by 4, and your hourly wage would be 6.4. So the hourly wage here would be $6.4. Answer would be D. This is how you calculate your hourly wage, because you can see here for 3,000 hours, your marginal physical product labor is 4 units. So 4 units, you just have to multiply hourly wage, and then you get the answer. Right. Question 18, the government attempts to stimulate growth by cutting its main interest rate, and what might reduce the effectiveness of this? So if you cut interest rates, people will then consume more, borrow more. So A, it says if investors' expectations are rising, this one is incorrect. And then B, it says if more borrowing is taking place, this will increase the effectiveness. And C, it says if savings are falling. If that's the case, right, AD would increase, so that will be effective. D, it says if the marginal capacity to consume is falling, this would result in a reduction in the effectiveness. Okay, for question 19, the diagram shows the relative position of two countries X and Y on the Kuznets curve, and what does the diagram indicate? Okay, so you need to remember this one is about Kuznets curve, so it's income per head and inequality. This is not the Laffer curve, which talks about tax revenue. So A, it says country X collects more income tax than country Y, this one is incorrect. B, it says country X has a higher national income than country Y. You can see that the inequality is actually much higher than compared to country Y, and you cannot, and because of this, right, since you can really see that the income per head is much higher in Y, so to say that country X has a higher national income than country Y is incorrect. Then C says country Y has less income inequality, that's correct because the inequality is lower. And then D says country Y is less economically developed, which is incorrect. A country that is more economically developed would have lesser income inequality, so the answer here is C. Okay, for question 20, the measure of economic welfare is often regarded as a better measure of economic welfare than gross domestic product per head, and what is additionally included in the calculation for MEW? So measure of economic welfare actually includes damages to the environment. So here the one that says damages to the environment will have to be C, so answer here is C. Alright, the other three it's not additionally included in MEW, but only for C because of the estimated cost of damage. 21, which statement about national income accounting is correct? So A, it says depreciation does not need to be subtracted from GDP figures because it has already been taken into account by firms. That is incorrect. There's a reason why there's money GDP and real GDP. And B, it says GDP greatly overstates the true value of output because some of the profit it includes is supernormal profit. Incorrect. It actually understates it because there's hidden economical activity that the GDP does not even know. And then C, it says GDP is a better measure of living standard GNP because net property income from abroad is not available for citizens. Incorrect. You cannot use GDP to actually calculate living standards because there may be people who work longer hours but there's improper work-life balance, so it will not work for this. And then D, it says GNP per capita ignores many important factors that affect citizens' living standards, and this one is correct. It indeed actually ignores many factors when it comes to the standards of living. 22, the chart provides information about employment rates as a percentage of total employment in the primary, secondary, and tertiary sector of 4 countries, and what is most likely to represent the most economically developed country. So normally the country that is most developed would rely less on its primary sector but rely more on the tertiary and secondary sector. So let's see which one actually relies more on the primary sector. From this graph here, you can see that there will be B and D, so we can directly just rule that out. And then you can see here for A and C. A and C here, of course if you compare, right, you prefer that the tertiary economy be actually much higher than anything else here. You can see if we compare with A and C, mostly agricultural stuff in the primary sector is actually higher than A, and tertiary sector is almost at 60% compared to only about 45% in C. So the one that is the most economically developed will have to be A. Question 23, the government is committed to increasing real GDP using only fiscal and monetary policies, and which combination of measures is most likely to be effective in achieving this aim? Increasing real GDP, increasing income, and also increasing aggregate demand. Therefore, fiscal policy here, let's look at the 4 options here. A, says increase in the budget deficit. Yep, there is one possible answer. B, says increase government spending on roads. Possible answer. C, says reduce income tax. Possible answer. And D, says reduce wealth tax. Also a possible answer. Okay, so now let's look at monetary policy. Monetary policy here, it says central bank buys back government bonds. This is possible because the central bank buys back the government bonds, resulting in economic activity. B, it says increase short-term rate of interest. Incorrect, because if you increase short-term rate of interest, it will result in decreasing aggregate demand. And then central bank sells more government bonds. If you sell more government bonds, that means that now people will go and buy the bonds rather than actually engage in economic activity because you can earn from the bonds. So no, not the answer. Because central bank buys back your money, so money supply decreases. And D says increasing commercial banks cash deposit ratios, so people will just save more in banks, so that's not the answer. So answer here will have to be A. Question 24, what describes the multiplier process as it operates within a closed economy with no government sector? So A says changes in national income determine the level of investment. That is incorrect. B says the level of consumption depends on the level of national income. Incorrect. C says the levels of consumption and investment together determine the level of national income. This one is incorrect. D says when investment changes, there will be a greater change in the equilibrium national income. So basically, the change in the national income is determined by the level of investment. But if you see the all three answers on top, it's basically when the national income will determine the level of investment. This one is accelerator, and then the level of consumption depends on the level of national income. It's also accelerator, and then the level of consumption and investment together determine the level of national income, which is also which is not the answer, because you need to remember that for the circular flow income, there's only investment when it comes to injections. So answer here has to be D. Question 25, in an economy with no government sector, if C equals 40 plus 0.5y, I equals 80, x equals 100, and m equals 100, what would be the equilibrium level of y? Okay, so with no government sector, that means that it's C plus I plus x minus m. So C plus I here, you can see that we have no idea what is what, but then we do know that our exports and our imports, we can just ignore that because it's the same. And then our investment is 80, C is 40 plus 0.5y, so we can just substitute with them, 40 plus 0.5y plus 80. Okay, so you can just put y at the back because we want to calculate national income. So now what we can do is just take 40 plus 80, we get 120, move the 0.5y to the back, so that will give us 0.5y, okay, or also known as 1 over 2y, and then you move the 2 over, you get 240, so 240 equals to y, so answer here will have to be B. Alright, so you need to calculate income, we have y on both sides, so you just move it over to one side and you can get the answer. Question 26, which policy does a central bank undertake to pursue quantitative easing? Okay, so basically, if you look at the four options here, it says A, it says purchase long-term government debt from the public. This one is correct. B, it says purchase short-term government debt, not correct. And then definitely not sell, we need to purchase to actually pursue quantitative easing. And then question 27, what would be an increase in leakages of withdrawals from the circular flow income? Increase in leakages of withdrawals like savings, taxes, and imports. So A says increase in government spending, not the answer. B says imports, increase in spending on imports, yep, that is possible. C says increase in spending on transfer payment, that is not part of leakages of withdrawals. And then D says increase in wages paid to government employees. This one is not the answer either, because it says leakages of withdrawals. This one is injections, not injections, but that would be government expenditure, yeah, correct. So answer will have to be B. Question 28, which statement would both Keynesian and monetary school of thought accept? So A, it says high inflation and high employment are undesirable in a properly functioning economy. This is correct. B, it says increased government spending on investment project will always crowd out private investment. This one is incorrect. C, it says the best way for the economy to get out of recession is for the government to increase its expenditure. This one is Keynesian only. And D, it says the most effective way to reduce inflation is for government to exercise tight control over money supply. So government intervention again, so not the answer here. So answer here will have to be A. Question 29, in country X, the marginal rate of income tax imposed on the highest earners was 83%, which increased to 98% if income was received from interest or dividends. The highest marginal rate was then reduced to 40%. Despite this reduction, the tax revenue raised from the highest earners increased substantially. And which theoretical concept illustrates the relationship between tax rates and tax revenue? So 83%, which increased 93%. The highest marginal rate was then reduced to 40%. So this one, it's not Marshall-Lerner condition, it's also not the J curve. The J curve and the Marshall-Lerner condition is actually related, very related. So it's either B or D. So the one that can actually show tax revenue and tax income will have to be this curve, which is the Laffer curve. It's not the Phillips curve. So when you reduce your tax rate, you'll get an increase in your tax revenue. So answer, this one will have to be a Laffer curve, so answer is B. Question 30, the government is increasing the role of market forces in its economy. However, it imposed temporary maximum price control. Why might the government committed to reduce central planning introduce price control? Okay, A says to increase allocative efficiency. This one is incorrect. If you impose temporary maximum price control, your maximum price will be below the equilibrium, so there's no way it's going to increase allocative efficiency. B says to increase the incentive for producers to raise supply. Incorrect. That will be giving us subsidies. C says to reduce consumer demand. To reduce supply, that is possible, but not reduce consumer demand. You only increase the demand. D says to reduce expectation of inflation. Yep, this is possible, because if you were to allow the prices to increase, it may result in increase in the price level. So by setting a maximum price, the price will always remain the same. So yes, it would reduce expectations of inflation. So answer here will have to be D. Alright, so this is the end of this paper. I hope you guys find this video helpful. Do share this video out to other people who may need help with economics A2 level. As always, I hope to see you guys again in the next video. Till then, this is qiphyedu. Goodbye.